Welcome to the 2026 Dialogue, a masterclass series by the HR Association of India. I am Neha Jagnani, and today we'll be discussing a topic that sits at the intersection of finance, technology, governance, and business strategy. As organizations continue to embrace digital transformation, CFOs are no longer viewed solely as financial custodians. Our theme for the session today is CFO leadership in a digital era. To explore this important conversation, we are joined by Mr. Naval Bajaj. Naval Kishore Bajaj is a board member and CFO for SEG Automotive India, a German mobility company, and a fellow chartered accountant with 18 years of experience in finance strategy, risk management, audit, and investigations across global multinational organizations. He has contributed to formulation and revision of standards on forensics accountings and investigations and SIAs by ICAI. He has authored a book on fraud prevention and in his personal capacity. He also serves as a president of BVSS Bangalore chapter, a think tank of finance professionals advising Government of India on economic matters. He has received CFO of the Year awards in 2025 in Innovation and Transformation in Finance category and Manufacturing sector category from different CFO forums in India. Mr. Bajaj, thank you so much for joining. It's a pleasure having you.
Thank you so much, Neha, and for giving a good introduction. And I'm very glad to be there with you.
Sure. Thank you so much. Look forward to this exciting masterclass, Mr. Bajaj. So to begin with, my first question is, as digital transformation accelerates, how has the CFO's role evolved from financial stewardship to enterprise leadership?
Yeah, I think this is a very good question to start with. I would say finance has moved from a reporting history to shaping the future. And when I say that, the modern CFO is no longer just a custodian of numbers, and we are an architect of value, resilience, and transformation. 20 years ago, the CFO's scorecard was accuracy, timeliness in reporting, compliance, and today the expectations are very different. The question has really shifted from what happened, which is anyways there, which is the bread and butter, to what should we do next. And we prepare the future way forward for business with numbers, actions, and we need to track them. And that is where the value addition comes in. And that is where this function or this role has actually started a real participation on the business side and on the strategy side of the companies and organizations, Neha. And once again, the role expands. Once this role expands, naturally the priorities also evolve. So in terms of the priorities, the strategic partnership with the CEO and the board remains a top priority. And we have to drive the digital transformation because unless and until the CFO office involves in the digital transformation, the real return on investment and the evaluation of the return on investment in terms of prioritization, which part of it to be transformed first cannot be prioritized properly. And then the organizations cannot have the right approach or the right return on investment in a very smooth manner.
Sure.
Apart from this, being the custodian of risk and resilience, anyways, it was and it continues to be the role. Enabler of sustainable growth is again, an evergreen topic for the CFO office. So basically, in terms of the changing landscape, especially in my industry, automotive component manufacturing, especially where the electrification and software-defined vehicles and supply chain disruptions are also changing the entire landscape, especially because of the geopolitical scenario as well as the entire supply chain from global to hyper local and so on. Now, CFO office is expected to influence the entire business strategy and not merely reporting the financial performance.
Right.
So that's my that.
Sure. Beautifully put, Naval. So earlier it used to be more of reporting the history, but it is more now about shaping the future. And instead of just the number-centric function, it has become the architect of transformation. And very rightly said, it's the participation on the business side more that has evolved over the years, from a finance department, and priorities, being strategic partnership. And one thing that has been constant is the finance being the custodian of risk and resilience. So thank you so much for defining it. My next question, Naval, is what are your top priorities as a CFO and a board member of an automotive component manufacturing company?
Okay, so being part of the industry, in this industry, we are always focused on delivering the value to the customer, as less defects as possible, or zero defects is the target. Delivering on time to the customers is the target, but the margins are on the lower side because of the competition and because of the end customer priorities in the Indian, especially the Indian market landscape, even for my customers, which are the OEMs. When I talk about exports, even that landscape is changing, and that is also increasingly becoming more and more competitive with localization and other initiatives because of geopolitical scenario that is going on.
Right.
So in this market landscape, what CFO has to focus is, I think, 4 or 5 points come to my mind. First is, and most important, is the profitable growth. While growth without profitability, as I say, is ambition, but growth with profitability is value creation. So ambition is one thing and value creation is another thing. And as CFOs, we need to ensure that growth is profitable. And once we have the profits, we have to convert them to cash. And cash remains the oxygen of business, as everyone says that revenue is vanity, profit is sanity, but cash is reality. So CFOs are always focused on cash, and rightfully so. And it will always continue to be like that for future as well. It has to continue like that, especially in the given scenario, like my industry, especially because of a change in the raw material prices globally, whether it's copper, whether it's aluminum, steel, or other raw materials, packaging, everything has gone up. And because of that, we cannot pass on all the cost to the customers. At the same time, some compensations by way of contracts will anyways come, but there will be a lag. So to steer the company through this lag or through this pressure on the working capital, while keeping my vendors intact, while keeping my customers intact, is always going to be a challenge unless and until the company has a cash focus. And the third important point is on the risk and resilience. The ability to absorb the shocks is actually a competitive advantage these days. So as companies would have seen when COVID came, only the companies which had the capacity or capability to absorb the shocks, which had good cash in the balance sheet, were able to absorb and rather get competitive advantage because the other competition was not able to absorb. And then these companies have actually flourished like anything. So in the current scenario, which is again very volatile, the ability to absorb the shocks is very, very important, and it is actually a competitive advantage. And last but not the least, digital transformation, as I mentioned. But digital transformation, will also come with a lot of new kind of risks. For example, if a plant was not already connected to the cloud, so there was no risk of business continuity by way of a cyber attack. But when the plant is attached to or linked to a cloud, there is a possibility of business continuity risks because of an attack. Now, there are advantages of linking it to the cloud, the fast-paced decision making, better monitoring, more insights for the management. But then there are pitfalls. So CFO office has to actually evaluate both of them and keep monitoring both of them. So these are my 3-4 priorities on this.
So thank you so much. Just to summarize, there is profitability with growth, the importance of cash, ability to absorb the shock, just your reaction, your resilience in the time of uncertainty makes a real difference. And digital transformation becomes the top priority for CFOs. So thank you so much. My next question, Naval, is what new financial, cyber, and compliance risks are emerging in digitally driven organizations, and how should CFOs proactively address them?
See, the new risks which are coming into picture, as I previously also in the previous question tried to address, is one is like cyber attacks on which are relating to the business continuity risk, whether it's your plant or whether it's the corporate side. If your SAP goes down, the entire company goes down, and so on, right? Then there are issues about AI's misuse or unethical use, which could lead the organization into legal issues, reputational issues, and business continuity issues. Data privacy laws are, getting stronger in India. Also, it is there now. So that is another key risk which is now into place, which we have to monitor. And the penalties prescribed in the law, although they are yet to be put to anyone, but they are very much high penalties. The third party ecosystem, which was never the case earlier, now our customers, being global customers, they are looking at ESG and sustainable supply chains. So we have to also ensure that that the same thing is passed on, and we also ensure ethical ecosystems with the third parties, whether it's on the customer side, whether it's on the supplier side. And then last but not the least is the digital fraud. So these are the new and risks that are coming into picture.
Sure.
What we have to do, we have to embed the risk thinking into this strategy. We have to strengthen the governance on the IT side, I would say. We have to really use continuous controls monitoring, which is not at all a new concept. This concept has been there for 2 decades, I would say. Build governance frameworks which involve the right people, especially scenario planning, and then take care of it. But at the end of the day, I would say risk management is not about predicting every storm. It is about building stronger ships. So technology is changing not just the risk we face, but also the capabilities we need, right? So that has to be understood by finance function, by CFOs. And then one basic principle has to be kept in mind, that controls should not slow down the business. Rather, they should enable confident growth, which means that just like in a car, you have brakes. The brakes are actually an enabler for a car to be driven faster rather than keeping the speed slow. So I think that is the bottom line. If we keep this principle in mind and then design the controls, and all the other things are built upon this principle, then it enables the organization success, in my view.
Sure, very well said, Naval. So there is data privacy risk, there is third-party ecosystem that is highly at risk, and the digital frauds. And very beautifully said that you have to embed that, risk ecosystem where you're able to cope with that. At the same
Yeah.
time, the strengthening the governance on the IT side becomes the key. And very beautifully put that it's not always about the aftermath of things that what you do. It's more about what is your capability even before things happen. So thank you so much. My next question, Naval, is with advanced analytics and automation reshaping finance, what capabilities must CFO and finance teams build to stay relevant and strategic?
Okay, so there I would say that finance professionals, as finance professionals, we have to move from descriptive to prescriptive, or to predictive. Sorry. So while data is there, but insights are the main key advantage, or which will give the cutting edge to the organization. Nowadays, every organization is having data, but the organization which is really able to analyze the data on time, predict the future based on the past as well as the future possibilities, is going to get a competitive edge. So that is where finance professionals need to build these predictive models. So moving from descriptive to predictive. Then understanding the newer technologies, understanding how AI works, understanding how Gen AI works, how agentic AI works, how the robotics work, how all of them are different. I keep saying this in multiple forums. As finance professionals, we have the duty to evaluate these proposals coming to us, right? And also to drive them. But till the time we don't understand how they work, number one. Number two, till the time we don't understand the commercials behind it, we really cannot give value add to our stakeholders inside the organization.
Right.
So we must understand how they work and what are the commercials and which technology or which solution is going to fit where. I think that is very important. And we have to be agile thinkers. And what do I mean by saying agile thinkers? That using scenario planning and rolling forecast. Like rolling forecast is not a new thing I'm talking, but the accuracy of the rolling forecast based on the past and scenario planning is something that really needs to step up, I would say. And automation will replace some tasks, but it cannot replace the talent.
Right.
Automation can give me the data, but it cannot give me the final outcome of it. So that outcome, and how do I define that outcome? The communication, which is one major limitation with a lot of finance professions, I would say, Neha. I don't know, HR is generally, you people are good in that, but I think finance professionals, generally, they are very good in numbers, but in terms of the presentation and communicating the whole thing, some lag is there. So that remains one focus item. And last but not the least, I would say the future finance professional will combine the intelligent quotient, which is IQ, the emotional quotient, which is EQ, with the adaptability quotient. And adaptability in terms of learning the new technologies, laws are anyways changing, business scenario is changing. Companies, the same companies which started like 5 decades ago, their entire business portfolio, their entire product line, everything is changing, and it will continue to be like that going forward in next decade. So that adaptability is also going to be very critical for the finance professionals.
Sure, sure. Thank you so much for beautifully putting it together. So many takeaways. So from descriptive to predictive, while data is there, it's very, very important how you draw insights out of it and make informed decisions. Understanding how AI works, what fits where, the timing of it, having that knowledge beforehand becomes really key. Agile thinking is another aspect of it. The accuracy of forecast and scenario planning being an example of that. Communication becomes the key, and last but not the least, the aspiring financial professionals should, combine the IQ, EQ, and AQ together to get results which are more sustainable. So thank you so much. This brings us to the last question, Naval, which is in an era of heightened transparency and scrutiny, how can CFOs use digital transformation to build trust with board, regulators, and investors?
Okay, trust is something that is directly proportional to transparency. And the same situation applies to our interpersonal relationships. Same situation applies with the board and with the stakeholders.
Right.
But transparency for an organization's results comes from real-time visibility and the single source of the truth. So therefore, digital transformation actually plays a key role in real-time visibility and single source of the truth. So that is the first and foremost important thing to bring transparency, which helps ultimately in building the trust. Second is predictability. Based on the data, real-time insights, as long as we are able to give the forward-looking insights to the boards and investors, they get a trust that the company or the organization is in the right hands. And if we are not able to do that, they feel that these are just some accounting numbers coming in without the management knowing where they are heading, and that also enhances the trust. And I would also say that stakeholders today want more than historical reports. As I mentioned earlier also, they want forward-looking confidence. So there is a quote that comes to my mind that trust is earned in drops, but it can be lost in buckets. And we have to be very careful on the compliance side, always do the right thing. And even if it is difficult decision, I would rather say we always have to go with the right way rather than taking any shortcuts. I think with these few things, we can build a long-lasting trust with all of our stakeholders, and especially digital transformation, giving the information will play a key role in that.
Sure, sure. Thank you so much. So there is, real-time visibility and, a single source of information that brings a lot of trust in any relationship. and predictability also being the key. And trust factor is obviously there. So no shortcuts is very, very important to use and build your trust with either boards, investors, or regulator. So thank you so much. This brings us to the end of this masterclass, Naval, from HRAI. I thank you for sharing your insights very candidly. I think today's discussion highlights how CFO leadership is being redefined in this digital age. So many takeaways, right from what it used to be probably a decade ago and how it is. So the role has truly evolved and it has become a business enabler. So thank you so much for that.
Thank you for having me on board and sharing my views. It was
Thank you.
my pleasure. Thank you.
My pleasure, sir. Thank you so much.